Welcome to the deep dive. Today, we're diving into something that seems like you're really interested in based on the sources you sent over financial independence.
Yeah,
Now, I know a lot of people think FI is just about early retirement,
right.
but it's really about so much more than that.
It really is. Yeah. It's about having the freedom to design a life you love
Yeah.
without being tethered to a paycheck.
Yeah.
It's about having options and choices,
Right.
whether that's pursuing a passion project,
Mhm.
traveling the world, or simply spending more time with loved ones.
Okay, so let's unpack this.
Yeah.
You've sent over some really interesting articles and research on this topic.
Great.
And it seems like the first step on this journey is figuring out your FI number.
Yeah.
That's the amount you need to have invested to cover your living expenses without needing a job, right?
Precisely. And one of the most common ways to calculate that number is using the 25x rule.
Okay.
You simply take your annual expenses and multiply them by 25.
Okay.
That gives you a rough estimate of how much you need to have saved to be financially independent.
That makes sense. But is everyone's FI number the same? I imagine factors like lifestyle and location play a role.
Absolutely.
Huh?
Your FI number is as unique as you are.
Right.
Someone living a minimalist lifestyle
Mm-hmm.
in a low-cost-of-living area might have a significantly lower FI number
Right.
than someone living a more extravagant lifestyle in a major city.
So it's not just a one-size-fits-all kind of thing.
No.
It's about figuring out what financial freedom looks like for you and then crunching the numbers
Exactly.
based on your individual needs and goals.
And that's why it's so important to define what financial independence means to you
Right.
before you even start thinking about numbers.
Mm-hmm.
What are your dreams?
Mm-hmm.
What kind of lifestyle do you envision for yourself?
Yeah.
Once you have a clear vision, the numbers become much easier to calculate.
All right, so we have our target number, but how do we actually get there? It's one thing to dream about financial freedom,
Sure.
but it's another thing to make it a reality. One of the articles you sent talks about the importance of building passive income streams. What's fascinating here is that it suggests we can create wealth even while we sleep.
That's the allure of passive income, isn't it?
Yeah.
It's about generating income without actively trading your time for money.
Right.
Think of it as building assets that work for you even while you're off pursuing other interests.
This reminds me of a story I read about a woman who turned her passion for knitting into a successful online business.
Oh, wow.
She started by selling her handmade scarves and sweaters on Etsy, and now she's built a whole empire around it,
That's awesome.
complete with online courses and a loyal following.
That's a great example.
Oh,
And there are countless other ways to generate passive income.
yeah.
Rental properties, dividend-paying stocks, online courses, and even something as simple as creating an ebook can all generate income with minimal ongoing effort once they're set up.
So it's not just about saving every penny we earn, it's also about creating additional income streams that work for us,
Right.
even while we're busy living our lives.
Exactly.
But let's be realistic, most of us still have to rely on our regular paychecks for now. One of the sources you shared had a really catchy title, Stop Sipping Lattes and Start Investing.
Oh, yeah, I saw that one.
I gotta admit that one made me chuckle.
It's a bit provocative, isn't it?
It is.
But it highlights a key principle of financial independence, living below your means. It's not about depriving yourself,
Right.
but about being mindful of your spending and making choices that align with your long-term goals.
That sounds motivating, but wouldn't tackling the highest interest debt first save more money in the long run?
Yeah.
I'm thinking about those credit card balances that just seem to linger.
You're absolutely right. High-interest debt can be a major obstacle to financial freedom.
Yeah.
And while the debt snowball method can be motivating,
Mm-hmm.
mathematically, the debt avalanche method, where you focus on paying off the highest interest debt first, is usually more efficient.
So it's a balancing act, finding a strategy that keeps you motivated while also being mindful of the numbers.
Exactly. It's about finding what works for you and sticking with it.
Right, so we're being mindful of our spending and tackling those pesky debts. Yes.
But where do we put the money we're saving? A regular savings account doesn't seem like the most effective strategy for long-term growth.
You're right. A regular savings account won't get you very far in today's economic climate.
Right.
To truly make your money work for you, we need to talk about investing.
Okay, investing.
Right.
Now, this is where things start to get a little more complex for me.
Okay.
I've heard a lot about index funds and ETFs being good options,
Mm-hmm.
especially for beginners.
Yes.
What's the difference between the two?
Both index funds and ETFs are excellent tools for building a diversified portfolio,
Okay.
especially for those new to investing. The main difference lies in how they're traded.
Okay.
Index funds are bought and sold through mutual fund companies,
Hmm.
while ETFs are traded on stock exchanges, much like individual stocks.
So ETFs offer more flexibility in terms of when and how you can buy and sell them?
Precisely. And they often have slightly lower expense ratios compared to index funds.
Okay.
But both offer broad market exposure,
Yeah.
which is essential for mitigating risk. So diversification is key. It's like that old saying, don't put all your eggs in one basket.
Right.
Instead, spread your investments across different asset classes to minimize risk. That makes sense.
Yeah.
But I've always been a bit hesitant to invest in individual stocks. I remember trying to pick winners back in the day,
Oh,
and let's just say it didn't end well.
we've all been there. Stock picking can be tempting,
Yeah,
but it's often a gamble even for seasoned investors.
right.
Index funds and ETFs take the guesswork out of investing by providing instant diversification.
Right.
You're essentially buying a tiny sliver of every publicly traded company
Okay.
in a specific market index like the S&P 500.
So it's a more passive approach to investing. Instead of trying to outsmart the market, you're riding the wave of overall market growth.
Exactly. And history has shown that over the long term,
Yeah.
the market tends to go up.
This makes me think about the power of compound interest.
Yes.
It's amazing how even small amounts invested consistently over time can grow into something substantial.
It really is.
Compound interest is fascinating because it seems to defy linear growth. Is there a point where it plateaus,
That's a great question.
or does it keep accelerating?
And it's one of the reasons why starting early is so crucial. Compounding doesn't have a limit.
Wow.
It's like a snowball rolling downhill.
Okay.
It just keeps getting bigger and bigger over time.
So the earlier we start investing, the more time that snowball has to gain momentum.
Precisely.
Yeah.
Even if you could only invest a small amount right now,
Right.
the magic of compounding will work its wonders over time.
Okay, so we're building passive income streams,
Yes.
we're being mindful of our spending, and we're investing wisely.
Mm.
It's starting to feel like we're building a solid foundation for financial independence.
It sounds like it.
But is there anything else we need to consider on this journey?
One crucial aspect that's often overlooked is the importance of mindset.
Mindset. Now, this sounds intriguing.
It's all about approaching this journey with curiosity,
Okay.
a willingness to learn, and an openness to adapt.
Mm-hmm.
The financial landscape is constantly changing, so it's important to stay informed, educate yourself,
Right.
and be willing to adjust your strategies as needed.
So it's not just about crunching numbers and following a strict plan. It's about being flexible and embracing the learning process along the way.
Exactly. It's about seeing challenges as opportunities for growth
Mm-hmm.
and understanding that setbacks are not failures,
Okay.
but simply learning experiences.
Mm-hmm.
And most importantly, it's about believing in yourself and your ability to achieve your financial goals.
I love that perspective. It takes some of the pressure off knowing that it's okay to make mistakes and course correct along the way.
Right.
We're all human after all.
Absolutely.
Yeah.
And speaking of the human element, we need to address one more crucial aspect before we move on,
Okay.
the psychological impact of debt.
Ah, yes. Debt. It's a
Huh.
reality for many of us.
Yeah.
And it can feel like a heavy weight holding us back from achieving our financial dreams. How do we manage the emotional stress that often comes with being in debt?
First and foremost, it's important to remember that you're not alone. Millions of people are struggling with debt,
Right.
and it's nothing to be ashamed of.
Right.
The key is to acknowledge the problem, create a plan to address it, and take action.
It can be so easy to fall into the trap of avoidance and denial when it comes to debt. But you're right, the first step is to face it head on and start taking steps to regain control.
Exactly. And remember, there are resources available to help you navigate this challenge.
Okay.
Financial advisors, credit counseling agencies, and even online communities can provide support and guidance.
That's great advice. It's so important to remember that we don't have to go through this alone.
Absolutely. And once you have a plan in place and start seeing progress, even small wins can have a huge positive impact on your mindset and motivation.
This has been an incredibly insightful conversation so far. We've covered a lot of ground. Defining our FI number,
Yeah, we have.
exploring passive income, being mindful of our spending, tackling debt, investing wisely, and cultivating a growth mindset.
It's a lot to cover.
It feels like we've built a solid foundation for understanding what it takes to achieve financial independence.
We have.
Yeah.
And remember, this is just the beginning. There's so much more to explore on this journey,
Okay.
and we've only just scratched the surface.
Okay. I'm already eager to dive deeper. But for now, let's take a moment to reflect on what we've learned and come back ready to explore even more strategies and insights.
Sounds good. Welcome back to our deep dive into financial independence. Before we pause for a moment of reflection, we were discussing the importance of mindset
Right.
and how our thoughts and beliefs can either empower us or hold us back on this journey.
That's right. And I think it's so easy to get caught up in the numbers, the
Yeah.
spreadsheets, the investment strategies
Okay.
that we sometimes forget about the mental and emotional aspects of financial independence.
Absolutely. Financial independence is not just about financial well-being. It's about overall well-being. It's about creating a life of freedom,
Hmm.
purpose, and joy. And that starts with cultivating a healthy relationship with money.
I see what you mean. It's not just about accumulating wealth, it's about using that wealth to create a life that truly aligns with our values and aspirations. Speaking of aspirations, one of the things that really excites me about financial independence is the potential to explore unconventional income streams.
Oh, yeah.
We touched on this briefly earlier,
Right.
but there's a whole world of possibilities out there beyond traditional jobs and investments.
Absolutely. The rise of the gig economy and the accessibility of online platforms have opened up a world of opportunities
Hmm.
for anyone with a skill, a passion, or a unique idea.
Okay, spill the beans. What are some of these unconventional income streams that could help us fast track our journey to financial independence?
Well, think about the skills and passions you already have
Okay.
that could be monetized. Perhaps you're a talented writer who could freelance a skilled photographer, who could offer photography services, or a tech-savvy individual who could build websites or apps.
You know, that reminds me of a friend who's an incredible cook. He started by offering private cooking classes in his home kitchen, and now he's catering events and even developing his own line of gourmet sauces.
That's fantastic.
Yeah.
And it highlights the fact that with a bit of creativity and hustle,
Right.
you can turn your passions into profitable ventures.
Absolutely. And the beauty of these side hustles is that they can not only generate extra income,
Right?
but also provide a sense of purpose and fulfillment. It's like that saying, find a job you love and you'll never work a day in your life.
Precisely. It's about finding work that aligns with your interests and skills, something that energizes you rather than drains you.
Okay, so we're exploring unconventional income streams, we're being mindful of our spending, and we're investing wisely. It feels like we're building a solid foundation for financial freedom,
Yeah.
but is there anything else we should be aware of as we navigate this path?
One thing that often comes up is the concept of lifestyle creep. As we earn more or achieve certain financial milestones,
Okay.
it's easy to gradually increase our spending without even realizing it.
Ugh. Lifestyle creep. It's like that sneaky little monster that slowly but surely eats away at our savings goals. How do we keep it at bay?
Awareness is key. Regularly tracking our spending and being mindful of our purchases can help us identify areas where we might be spending more than necessary. It's about asking ourselves, do I really need this or am I just trying to keep up with the Joneses?
So it's back to those good old budgeting habits. It seems like tracking our spending is a recurring theme on the road to financial independence.
Absolutely. It's essential to have a clear understanding of where our money is going so we can make informed choices that align with our goals. And it's not just about tracking expenses, it's also about being mindful of our income. As our income grows, it's important to resist the urge to immediately upgrade our lifestyle.
So instead of automatically increasing our spending when we get a raise or a bonus, we should consider directing that extra income towards our financial goals.
Right.
Whether that's paying off debt faster, investing more aggressively, or even treating ourselves to a guilt-free splurge once in a while.
Exactly. It's about finding a balance that works for you. It's not about deprivation. It's about making conscious choices that align with your values and your long-term vision.
I like that. It's about being intentional with our money and making sure it's working for us, not against us. Speaking of working for us, let's go back to the idea of passive income for a moment.
Hmm.
I'm curious to know more about the different models of passive income and how they compare.
That's a great question. There are numerous ways to generate passive income, each with its own advantages and disadvantages.
For instance, I've heard a lot about real estate being a popular avenue for passive income.
Real estate can be a fantastic way to build wealth and generate ongoing cash flow. Owning rental properties can provide a steady stream of rental income, and you also benefit from property appreciation over time.
But I imagine it also comes with its own set of challenges,
Of
right?
course,
Yeah, right?
being a landlord requires time, effort, and responsibility.
Mhm.
You need to manage tenants, maintain the property, and deal with any unexpected issues that may arise.
So it's not entirely passive, but it can be a worthwhile investment if you're willing to put in the work.
Exactly. And there are ways to make it more passive,
Okay.
such as hiring a property management company to handle the day-to-day operations.
What about dividend-paying stocks? That seems like a more hands-off approach to passive income.
Dividend investing can be an excellent option for those seeking a more passive approach.
Mm.
By investing in companies that pay dividends, you essentially become a part owner of those businesses and receive a share of their profits.
So it's like getting paid to be an owner, even if you're not actively involved in running the company?
Precisely. And the beauty of dividend investing is that you can reinvest those dividends to purchase more shares, which can compound your returns over time.
So it's another way to harness the power of compounding. I love it. What about online businesses? It seems like everyone is launching an online course or building an app these days.
The internet has created a wealth of opportunities for entrepreneurship and passive income. Creating and selling online courses, building and monetizing websites or apps, and even affiliate marketing can all generate income with minimal ongoing effort once they're set up.
But I imagine building a successful online business requires a significant upfront investment of time and effort, right?
It definitely takes work,
Right.
but the potential rewards can be substantial. And the beauty of online businesses is that they can be scaled to reach a global audience, which can significantly increase your earning potential.
This is making me rethink my whole career path. Maybe I should ditch my day job and become an online entrepreneur.
Huh. Well, it's important to carefully consider the risks and rewards before making any major life changes,
True.
but it's certainly inspiring to think about the possibilities.
Absolutely. And it highlights the fact that there's no one-size-fits-all approach to financial independence. It's about finding a path that aligns with your skills, your passions, and your overall goals.
Exactly. And it's about being open to exploring different avenues and experimenting to find what works best for you.
This conversation has been so insightful. We've explored various passive income models, discussed the importance of mindset, and even touched on the emotional aspects of debt. It feels like we're building a well-rounded understanding of what it takes to achieve financial freedom.
We are. And remember, financial independence is not just about reaching a certain net worth or retiring early.
Right.
It's about creating a life of abundance, purpose, and joy.
I love that perspective. It's about taking control of our finances so that they work for us, allowing us to live a life that truly aligns with our values and aspirations.
Precisely. And it's a journey that's unique to each individual. There's no right or wrong way to do it.
So it's about finding our own path, learning from our mistakes, and celebrating our successes along the way. But before we get too caught up in the excitement of the journey, let's take a moment to acknowledge some of the potential pitfalls that we might encounter along the way.
That's a great point. It's important to be aware of the common mistakes that people make on their path to financial independence,
Right.
so we can avoid those traps and stay on track.
Okay, I'm all ears. What are some of those pitfalls we should be on the lookout for?
One of the most common mistakes is neglecting to create a solid financial plan.
Okay, a financial plan. It sounds a bit formal and intimidating,
Sure.
but I understand the importance of having a roadmap. What exactly does a financial plan entail?
It doesn't have to be complicated. Think of it as a blueprint for your financial future.
Okay.
It outlines your goals, your income, your expenses, your saving strategy, and your investment plan.
So it's like a GPS for our financial journey, helping us navigate towards our desired destination.
Exactly. Without a clear plan, it's easy to get sidetracked, make impulsive decisions, and end up further away from our goals.
That makes sense. It's like trying to build a house without knowing how much lumber you need or where the foundation goes. Chaos.
Precisely. A well-defined financial plan helps you stay focused, prioritize your actions, and make informed choices that align with your long-term goals.
All right, so financial plan. Check. What other pitfalls should we be wary of?
Another common mistake is falling into the trap of lifestyle inflation, which we discussed earlier. As our income grows, it's tempting to upgrade our lifestyle accordingly. A bigger house, a fancier car, more luxurious vacations.
Yeah, it's easy to get caught up in that keeping up with the Joneses mentality, especially when we're surrounded by messages that equate success with material possessions.
Absolutely. And before we know it, we're back on that treadmill, working harder to earn more, to spend more, and further away from our FI goals.
So how do we break free from that cycle? How do we ensure that our spending aligns with our values and not just our income?
It comes back to mindfulness and intentionality. Before making a significant purchase, ask yourself, does this truly align with my values and long-term goals? If it doesn't, walk away.
I love that. It's about prioritizing experiences and investments that bring lasting joy and fulfillment rather than fleeting material satisfaction.
Exactly. And another mistake to avoid is neglecting to invest wisely. Many people are intimidated by investing or simply don't know where to start.
Yeah, the world of investing can feel overwhelming, especially with so many options and strategies out there. It's easy to feel paralyzed by indecision.
Absolutely. But remember, investing doesn't have to be complicated. Start by educating yourself, seeking guidance from reputable sources, and building a diversified portfolio that aligns with your risk tolerance and time horizon.
So it's about taking that first step, even if it's a small one, and then continuing to learn and grow as we go.
Exactly. And don't be afraid to ask for help. There are financial advisors, online resources, and even podcasts like this one to guide you along the way.
All right, so we're creating a financial plan, resisting lifestyle inflation, and investing wisely. Any other words of wisdom to help us avoid those FI pitfalls?
One more that's crucial is not underestimating the importance of patience. Remember, financial independence is a marathon, not a sprint.
Right. It's about playing the long game, staying consistent with our savings and investment strategies, and trusting the process.
Exactly. There will be ups and downs along the way, market fluctuations, unexpected expenses, and moments of doubt. But by staying committed to our goals, adapting to challenges, and celebrating our progress, we can ultimately achieve the financial freedom we desire.
That's such an inspiring message. It brings us to what feels like a natural point to pause and absorb all of these valuable insights.
Yeah.
We've covered a lot of ground, and I'm sure our listeners are eager to hear what else you have to share.
Me too. We've laid a strong foundation, and I can't wait to explore even more empowering concepts and strategies in our final segment.
Welcome back. Before we took a moment to gather our thoughts, we were talking about some of the common pitfalls people stumble into on their journey to financial independence.
Yes. And we left off talking about the importance of patience. I think a lot of people underestimate how long this process can actually take.
Yeah, it's easy to get caught up in the hype of get-rich-quick schemes and overnight success stories.
Right.
But financial independence is more like planting a tree.
Mm,
It takes time, nurturing, and consistent effort to see the fruits of your labor.
that's a great analogy. You can't expect to plant a seed today and have a towering oak tree tomorrow.
Right.
It takes years of consistent watering, fertilizing, and pruning to reach its full potential.
So patience is key. But are there any other specific mindset traps we should be aware of?
One that comes to mind is the fear of missing out, or FOMO, as it's often called. It's easy to get swept up in the comparison game, especially in today's social media-driven world.
Oh, I know exactly what you mean. It can be tempting to try to keep up with the latest trends, gadgets, and experiences, even if it means stretching our budgets or taking on debt.
Exactly. And that's where the importance of defining your values and aligning your spending with those values comes in.
Yeah.
If you're constantly chasing after what everyone else has, you'll never be truly satisfied.
So it's about tuning out the noise and focusing on what truly matters to us.
Yeah.
What brings us joy,
Yeah,
what aligns with our long-term vision. Those are the things worth investing in, both financially and emotionally.
precisely. And remember, financial independence is not about deprivation.
Right.
It's about making conscious choices that align with your values and your goals.
It's about having the freedom to say yes to the things that truly matter and no to the things that don't. Speaking of saying no, another pitfall I've heard about is the tendency to overcomplicate things.
That's a common one,
Yeah.
especially when it comes to investing. There's so much information out there,
Yeah.
so many different strategies, so many conflicting opinions that it can be easy to get overwhelmed and paralyzed by indecision.
I've definitely been there. I remember spending hours researching different investment options,
Oh, yeah.
reading articles, watching videos, and ultimately feeling more confused than when I started.
It's easy to fall into the trap of analysis paralysis. But remember, investing doesn't have to be complicated. Start with the basics, build a diversified portfolio, and stay consistent with your contributions.
So it's about focusing on the fundamentals and not getting bogged down by the minutia. Kind of like building a house.
Yeah,
You start with a solid foundation and then gradually add the walls,
Yeah.
with the roof, the finishing touches.
exactly. And just like building a house, you don't need to be an expert in every aspect of the process. You can hire professionals to help you with the areas where you need support.
So don't be afraid to ask for help. That's great advice. I think sometimes we feel like we have to figure everything out on our own, but there's no shame in seeking guidance from those who have more experience.
Absolutely. And remember, financial independence is not a solo sport. It's a team effort. Surround yourself with a supportive community, whether that's family, friends, or online groups, and learn from each other's experiences.
That's a great point. It's like having a cheerleading squad to encourage you along the way and celebrate your wins.
Precisely. And speaking of wins, let's talk about the importance of celebrating our progress.
Yes. It's easy to get so focused on the end goal that we forget to acknowledge and appreciate the small victories along the way.
Exactly. Celebrating those milestones, no matter how small, can help us stay motivated and remind us why we embarked on this journey in the first place.
It's like those little rewards you give yourself during a long hike.
Yeah.
A sip of water, a snack, a moment to admire the view. Those little moments of satisfaction help you keep going and reach the summit.
I love that analogy. And that just like reaching the summit of a mountain, achieving financial independence is a remarkable accomplishment that deserves to be celebrated.
Absolutely. But it's also important to remember that financial independence is not a destination. It's a journey.
That's right. It's an ongoing process of learning, growing, and adapting. And the beauty of it is that there's always something new to discover, new challenges to overcome, and new heights to reach.
So it's not about reaching some arbitrary finish line and then coasting along. It's about continually striving to improve our financial well-being and create a life of abundance and purpose.
Precisely.
Yeah.
And it's a journey that's filled with rewards, not just financial rewards, but also emotional, mental, and even spiritual rewards.
This conversation has been so inspiring. I feel like we've not only demystified the concept of financial independence, but also reframed it as something that's attainable and even enjoyable.
I'm so glad to hear that. Remember, financial independence is not a privilege reserved for the wealthy or the lucky. It's a choice that anyone can make regardless of their income or background.
It's about taking control of our finances, aligning our spending with our values, investing wisely, and cultivating a mindset of growth and abundance.
Exactly. And it's about believing in ourselves and our ability to create a life of freedom and purpose.
Well said. Thank you for sharing your wisdom and insights with us today. This deep dive has been truly transformative.
It's been my pleasure. I hope our listeners feel empowered to embark on their own journeys to financial independence. Remember, the path may not always be easy, but the rewards are well worth the effort.
Absolutely. And remember, you don't have to go through this alone. There are resources available, communities to support you, and a wealth of knowledge at your fingertips.
So take that first step, stay committed to your goals, and never stop learning and growing. The possibilities are endless.
Thanks for joining us on this incredible deep dive. We'll be back next time with another fascinating topic and insightful conversation. Until then, keep exploring, keep learning, and keep striving for the life you deserve.